Hi, this is Ernest Rolfson, the CEO and founder of Finexio. Welcome to B2B Cash Flow Conversations, the podcast dedicated to sharing insights and innovations in business to business payments, working capital and cash flow management, and fintech entrepreneurship. In each episode, my guest and I tackle questions in the ever evolving world of fintech and payments, an industry that's rapidly evolving and of great interest to investors and businesses alike. Looking forward to having this conversation. Hey, so today we're meeting with Dean Leavitt, the founder and CEO of B2B payments company Boost Payment Solutions, which is at the leading edge of commercial payments. Dean here has over 30 years experience in the electronic payments industry. And prior to founding Boost, he's held senior leadership positions at several public and private payment companies. So good to be with you, old
Ernest, always good
friend.
to see you.
Absolutely. Where do we find ourselves today?
We're out on the east end of Long Island.
Love it, love it. That's good. That's where I wish I were
And where are you?
right now. I'm at my home in Charlotte.
Okay. Charlotte's
So
beautiful.
it is. The only difference between where we are is I can't hear the call of the seagulls. I just right outside your window.
That's
So
probably.
so I guess we'll get to it, but I did want to say congratulations on the Series C. I did see
Thank
that
you.
press release. I guess a day ago was the press release.
Yeah, we closed on Monday, a couple of days
Okay.
ago, and there's been kind of a stream of press associated with it. We're super excited,
Absolutely.
super excited about our new partner, Invictus Growth Partners, out of San Francisco. So very excited about it, and looking forward to big growth plans.
Absolutely. Well, can't wait to hear about them. But you've been at it for a while, and uh, keep you're getting more and more of that institutional funding, which would indicate you're doing something very right. So that I was glad to see that the other day for sure.
Great. Thank you. Thank you.
Um, why don't you just spend a few minutes telling us about your background? I know I referenced the 30 years. I'm not sure we'll be able to cover all 30 in detail, but what is kind of, I guess, the formative pieces that have brought you on this journey to now running a fintech company in one of the hottest spaces in payments
Sure.
globally, right? Time, right place for sure. What,
Sure.
yeah, what can you share?
Well, I started an ISO about 30 years ago. And I guess it's funny how history often repeats itself, where I chose to focus in on entities that had not previously accepted cards as a form of payment. So we did quite a bit of work with hospitals, universities, municipalities, interestingly, supermarkets, which at that time did not accept cards.
The
And
margins were not right, right? Is that right? There was
well,
a
so
margin
they
problem.
thought. It's interesting. So they thought. In the case of supermarkets, I'm proud to say I was kicked out of just about every supermarket chain in the New York metropolitan area, tri-state area, because the initial thought process on the part of the supermarket owners and managers
Right.
was that the margins were not there. Where they would say, "Hey, I make 1% on a can of beans. You want me to do what?" And and it was really just frankly through persistence and going back to them time and time again to finally present it as, tell you what. And we did this with several different supermarket chains. Give us one lane for 1 month. You'll pay nothing. We'll bring in the point of sale equipment on us. We'll process the transactions on us. Let it run for a month and let's just see what happens. And sure enough, with no exceptions, every single chain got back to us within the month and asked us to load up the lanes because they experienced a 38% lift in sales just by offering credit card acceptance on that one lane. People would buy a pack of gum or a People magazine or maybe an extra pound of turkey. And what they were seeing is people were spending a lot more money on higher margin products as well. So the net effect was very significant. And it's interesting how you kind of fast forward to now, when I started Boost 12 and a half years ago. Um, it was really against a backdrop of the types of enterprises we work with right now, never considering utilizing or accepting cards as a form of payment for larger AP spend, as you well know, and history in certain respects does repeat itself. In that, in the early days at Boost, I was also kicked out of many impressive places, offering up card acceptance as a form of payment. As far as what happened in between, I ran and owned ISOs. I ran a credit card technology company focused in the wireless arena. So it's been a series of different types of companies, all pretty much focused on electronic payments, and leading up to Boost. So it's been a very interesting ride.
Nice, nice. I love the phrase, load up the lanes. I've never heard that in the payments
Load
industry
up the
before, but
lanes. It was
that's
music to our ears, as you can imagine.
absolutely, that's the best. As you're right, either that or you're being thrown out of the Gristedes. So I'd rather load up the lane than
Exactly.
you're grabbing at coupon books or something on the way out the door. Um, how did the idea for Boost specifically come up? Because the B2B thing is still, I am shocked at how there is so little investment and approach in this area and how misunderstood it is. I'm sure you've got a whole train of thought around that topic, but when did you become aware that this B2B thing was a major unsolved issue and you were like, I got to go focus on this
Yeah.
angle?
It was really over the years that I was kind of the latter part of the years that I was in the consumer end of the space, where having worked with most of the largest acquirers and processors in the arena, and seeing uh, kind of a history of failed attempts by many of these larger players to get into B2B acquiring. Um, Companies big and small, well funded and not, just a complete failure to tackle that. And it was really against that backdrop that I said, let me go after. Let me first understand why there have been so many failures, and there's a business here. I just knew there was a business here. The spend among businesses just absolutely dwarfs consumer spend by 5 to 1 or something like that. So I started studying why there had been so many failures, and what became very apparent very quickly was that what most of these companies were doing was taking B2C products, solutions, pricing constructs, marketing and sales strategies, all the way down the line, throwing them in a bag, writing B2B on it, and then going back to market, going back into
Right.
the commercial marketplace.
Lipstick on the pig.
Lipstick on well, actually lipstick on a beautiful animal, but that just didn't fit in the same stall, right?
Right.
You know,
Right.
and and by the way, that's no slam to pigs. Pigs are beautiful too.
Absolute
Um,
to their owners.
but no, I mean it was really about just fitting this kind of square peg into the proverbial round hole.
Right.
And the primary reason is there is a dramatic difference between a consumer card-based transaction and a B2B transaction.
Right.
The card rails were never really designed for business to business transactions. They certainly were not designed to transfer the data associated with a business to business transaction, where you have hundreds, thousands, sometimes tens of thousands of line item detail associated with invoices and all the sub data associated with the invoices. So they were just not built for that. And the other thing is there's a big difference in the commercial relationship, just the relationship between buyer and supplier. Where if I walk into a shoe store and buy a pair of shoes with a credit card, I walk out with my shoes, and the next day the merchant has the money. And then the next 500 people that come in behind me to buy that same pair of shoes at that same store have the exact same experience as I did. That is not the case in B2B land. The relationship that a particular supplier has across its customer base is dramatically different. Maybe one customer buys a lot, another buys a little. Maybe somebody buys a lot of super high margin services, where somebody else buys low margin product. Maybe I've been a customer for 20 years and this one just started working. So, as different as the relationships are between trading partners and the contractual agreements that they have, that's also how different the payment method and terms associated with those payments need to be. And that was never really configured or envisioned in when the credit card industry was born 70 whatever years ago. So it was really against that backdrop that I decided to start a company really just focused on B2B, so that we can accommodate these relationships that businesses have with other businesses.
Understood. Um, uh, as it relates to Boost, and I mean, now you're positioned really as one of the leaders in this area of commercial card optimization, right? One of the ways to help drive commercial B2B payments acceptance, and for the issuers and for yourself, monetization, right? I think it's convenience for the corporates on both sides. But what has the evolution been with Boost? And we talked about new investment earlier. I'm sure things are going to evolve going forward, but has it evolved from day one for you? And how do you see this whole thing shaking out? Because it seems like card is really going to continue on a terrific tear over the next 5 to 10 years.
Absolutely. So it's shifted dramatically in terms of what we do for the B2B community and how we've positioned ourselves. I started the company as an ISO, which was purely services driven. We did not have our own proprietary technology. We utilized the technology of our acquirer processor partner. Um, and it was really only after 3 or 4 years into that we started um, being asked to tweak this or tweak that, or gee, could you guys do this or that, where the existing technology just did not have that capability. So we started bringing our technology capabilities in house, and we started, building what was initially a very simple, augmentation of the technology that our processor partners had, and it's since over that, call it 7 8 year period, morphed into our now being a full fintech, where we are. It is our technology stack that in part differentiates us from most of the players in the industry. So it's really been a metamorphosis for the company, just based solely on the requirements we heard more and more from the field, from our customers.
What were some of those? What are some of those kind of key requirements for B2B, or some of the, I guess, software differentiators? Because a lot of people are like, "Oh, payments, that's a commodity," or credit card processing, "Oh, that's easy." But your argument is, well, now Boost, you're really differentiated by the software, and there's been some key things that the credit card companies have not been able to do, that now you've spent time and money and learning on the software side to be able to do. Can you speak to any of that, or
Sure.
any unique elements you guys have going on there?
Sure. I mean, it's really a combination of the technology and the capabilities, the process, as well as the market positioning. So, from a technology perspective, what people often, when they talk, those same people talk about how easy and how commoditized the payments business is, they're often focused on the movement of money. And while that's obviously very important when it relates to facilitating payments
Right.
between buyers and suppliers, equally important is the data exchange. And we spend a lot of time, effort, and energy focusing on the data. And by that, I mean, what is the data? What's the remittance detail, the invoice data, and all of the other information associated with a particular payment? How is that exchanged among the trading partners? Right. So historically, the acquiring business, and to a large extent, it's still the case, they're not set up to provide the kind of data and in the type of formats that a supplier needs to ingest it into their accounting or ERP system so that they can use that data. They convert that data into information that they can use to manage their enterprise. So, one of the key components of our platform is, in fact, being able to offer both sides of the equation, because we also often report to the buyer, the cardholder, but a lot of our focus really is on the supplier. How do they need to receive that data um, so that they can use that information? And we spend a lot of time around that. And there's, as you can imagine, a broad spectrum of formats that suppliers need.
This
Have to
is
make
into their, you're talking for the listeners, this is about getting that data into their ERP so they can do their accounting and reconciliation work, right?
Exactly. Exactly. Very often, when you look at other payment modalities, non-digitized payment modalities, if a buyer sends a payer, sends a supplier a check, it may be accompanied by, if it's a single payment that might represent, 1,500 invoices, it'll
Right.
be accompanied by a stack of paper that somebody or some people will need to manually go through, enter, post, and reconcile the transactions. That just doesn't fly with large and even not so large buyer supplier relationships. So, getting that data that's associated with that payment to that supplier's accounting or ERP platform is really mission critical. So we spend a lot of time with that. Another interesting thing we focus a lot on is automation of the transaction itself. As virtual cards and commercial card products have become more and more popular by corporate buyers that want to pay their suppliers with a card, um, larger suppliers have hundreds or thousands of these coming in every day from their commercial customers. And having to field those, unpack those emails as it's usually presented in email, extract the card data, extract the remittance detail, and then manually process these transactions into their credit card processing system or their ERP or accounting system is incredibly cumbersome. And that has really held back many suppliers historically from agreeing to accept cards because it's just too cumbersome. They're just not set up on the AR front to do that kind of thing. So, one of the key technological components of our platform is converting all of those email based transactions into a completely passive experience for the supplier, which is commonly referred to as straight through processing, STP. And 100% of the transactions that run across the Boost platform are in fact STP. So our suppliers, they don't do anything. They just sit back and they receive the funds, deposit into whatever bank account they've allocated for that activity, and they then receive the remittance detail, again, in a format and a delivery protocol so that can flow right into their accounting system.
That makes a lot of sense. Um, well, with the new investment now, are you going to continue on doing the same, or is it about expanding the capabilities across that last piece you just touched on, right? Across this kind of AR function, that's a hotter space now. Are you thinking geographic expansion? What are you guys thinking about in terms of
Uh,
where you're going next?
Yes and yes.
Okay,
You're,
nice,
you're never done when you're a
right?
fintech with
Yeah,
building out your platform. Um, you know, uh, we have been expanding our capabilities from a transaction processing, from a reporting perspective over the last several years, and that continues. That never really ends.
right,
Um, we continue to add all types of functionality, rules-based processing, which essentially means you have buyers and suppliers that, in addition to any contractual relationship they may have with, I'm going to buy this much of that product or service for this price and these payment terms. Um, in addition to that, it's what's the pricing associated with this payment? What's been agreed upon? What are the rules of acceptance? Yes, I, the supplier, will agree to accept cards if I pay this for it, or if I only have to accept cards if I get paid within 10 days, or only if if it's below or above this transaction amount. There are rules that are established between commercial trading partners. We've built in all of those capabilities within our platform so that we can enforce those rules on the fly. So whatever the buyer and supplier have agreed upon for the rules of engagement, the rules of acceptance of these commercial card products, our platform enforces those rules and adjudicates them on the fly. So the rule set associated with that continues to expand more and more as we hear about more requests from the community, buyers and suppliers. So that's an area we're focusing a lot of attention on. You mentioned geographically, we're currently in 37 countries. We continue to add new regions on every quarter, so we're going to continue to expand that pretty dramatically. We've recently been hiring folks in Australia and Europe, Brazil, Canada, many of the regions that we're operating in currently, and those that we want to really expand use and acceptance of commercial card products in. So it's a combination of building out our RevGen team, building out our technology platform, and building out all the support associated with it to make sure that we can accommodate all the growth that we're anticipating over the next several years. So it's kind of a multifaceted application of proceeds.
Nice, nice. Well, I want to just talk about you. Actually, I don't know that folks would know this. You actually have some phenomenal board members from the industry. Two of whom I know personally. I think Chris McWilton's still involved, right? And Miles Kilburn.
Yeah. So Miles is not on our board. His
Okay.
partner Howard Mergelkamp, Howard
Okay.
and Miles formed Mosaic.
Right.
And both Howard and Chris are phenomenal board members, incredibly supportive. They've become good friends. We also, with this new investment from Invictus Growth Partners, William Nettles will be joining our board as well, who also has deep industry experience. He was really
on the payment side.
Yeah, he was the primary driver of growth and the acquisitive strategy of Verifone over an 11-year period.
Got it.
So he knows payments quite well, and really looking forward to having him on the board. So it's a great group, and it continues to grow.
Nice, nice. What I wanted to, it's great that you're in so many countries. Would you say though that this is still, well, not still, but the biggest barrier, and also the biggest opportunity, the most paper checks is the U.S., and that's where you see the most opportunity. Is that fair statement to say, or
So
am I thinking about it wrong?
Well, I think it's two slightly different, but obviously related issues. Yes, as it relates to the migration of checks to digital payments, clearly the U.S. Is I don't know if you put it ahead or behind of the world in terms of still having I don't know. It depends on what data you look at. 50+%
Sure.
of B2B transactions are still on paper checks.
Trillions, 10 trillion plus.
Yeah, something like that. So, clearly when we migrate spend from other payment modalities to card, check is a big piece of that. And it probably represents, the lion's share of that. But that's just a piece of the puzzle. When we talk about other regions, many of which, by the way, are ahead of the United States significantly as it relates to digitizing invoices and just the general B2B payments, landscape. For them, it's not just about check migration. It's about automation. It's about process efficiencies. It's about, obviously, it's always to some extent about working capital on both sides of the equation. When you're dealing with a credit card product, you're talking about working capital, DPO extension for the buyer. And very often what we try to do on a kind of a win-win is not only extend the working capital, the days payable outstanding for the buyer, but we can also at the same time reduce the days sales outstanding, the DSO, for the supplier, thereby increasing their working capital as well. So that's really the perfect win by sandwiching in between a grace period associated with a credit card product. So, when you go outside of the United States, I'm not saying there's no checks out there. Some regions certainly do have quite a bit of checks, but it's not all about moving folks off checks and onto cards. There are so many other advantages for both buyer and supplier and financial institutions
Sure.
that are driving both sides of the equation in many respects from the process. So it's kind of a mixed bag.
That makes sense. Are there any misconceptions around commercial card adoption in B2B, whether it's the accept, potential customers or partners of yours, but also just say if I was wearing an investor hat or someone else's hat. The number one question I always get is like, if someone doesn't really know much, is like, why would anybody pay a fee to take these payments? Like, that doesn't make any sense to me. But I'm just curious because if I understand correctly, you're doing direct sales and growing that. You also work with financial institutions. You're solving problems for them, but you're also working with these corporates on both sides. So, are there some things you have to overcome there? Is there some knowledge gap around it? And certainly, you're very a card centric solution. However, you're certainly speaking to concepts and modalities broader than just cards. So, and it would obviously that would be important to your customers, certainly.
Yeah. So the answer is, getting back to the history repeats itself theme from earlier. Yes, very often the knee jerk reaction from suppliers that are not intimately familiar with, kind of current day commercial card acceptance or the
Yeah.
capabilities that are out there is, get out of my office, basically. Um, and because the perception, and we spend a lot of time during the day, trying to get rid of those misperceptions. The misperception often is that ACH and checks are free, credit cards cost a lot, right?
Right.
Um,
Right. It's free
and
to just get thousands of pieces of paper sent to your office and figure out what to do with them. It's just free.
Exactly, and then have somebody go down to the bank and make the deposits and get charged
Right.
fees for that, et cetera. So there are those misperceptions, and by the way, the misperceptions often have to do with not only the economics, which is often the case. Credit cards cost 3, 4, 5, 6%, and checks and ACH and wires are free. But also the process. There's often a misunderstanding of how passive the process could be, how easy it could be to receive a card payment if it's done correctly, right? So yeah, very often there's all these misperceptions that we deal with, uh, quite a bit. Um, as far as the financial institutions are concerned, when I first started the company in 2009, the notion of utilizing card products for these larger AP file based expenses was really not there. So we spent quite a bit of time educating our those who are now our issuer partners, bank issuers, obviously non-bank issuers like Finexio and others, understanding really how we can migrate a lot of that spend over to card products. So it's been a long road of educating a marketplace that kind of had a mindset early on that these types of transactions were just not really made for card products. But what we've seen is a dramatic change. When I first started the company, the notion of those large transactions being on cards was absurd.
And you're
Absurd.
talking about you're talking six figure transactions here. You're talking 25,000
Well, I
and
mean,
up. Or,
about about a month and a half ago, we processed a single payment for $33 million.
wow.
Um, yeah,
Unheard of.
but on any given
That's a good
day,
day. That's
it, it,
great.
it was a good month that day. But um, No, I mean, on any given day, we're processing, multi-million dollar payments
Sure.
from the buyers to suppliers on our platform. So that's been just a pretty dramatic mind shift
I would
in
say
terms of
so.
how the industry and the stakeholders look at cards as an alternative to check and wire and ACH. So it's been an interesting road, and yeah, I still think we're at the 10 or 20-yard line going a long way. As of the whatever
Absolutely.
120 some odd trillion dollars out there of B2B payments, just the vast majority of it is not yet digitized. So we have a long way to go, but I think we've made some tremendous progress in terms of positioning ourselves in the marketplace and educating the key stakeholders that this is a viable alternative, and that there is not such a disparity between the costs of other payment modalities and cards. In fact, in many cases, the efficiencies, trump small t trump the all of the other aspects associated with card acceptance. So it's a continual educational process that we're just making great progress there.
Did some of those, I'm sure you've talked about this in the past, but have some of those barriers and misconceptions gone by the wayside or lessened because of COVID? And is that acceleration? I mean, so we've experienced digital transformation advances due to businesses saying, I need to get out of the check printing business almost overnight. I got people going in the office, they're printing manual checks, they're wearing their masks, checkbooks in my house, we got to, like all that stuff has been happening. Has that been a tailwind for you, and is that going to continue, because we're still not out of COVID yet? Is that, I mean, that's what we've experienced more on the AP side. I'm sure it's been positive for you, but I'd love to hear
Yeah.
how you think, is it going to change the industry more going forward? Is it going to be easier going forward?
Well,
No, if
so
change, I don't know.
yeah, so I mean, the short answer is yes. It has definitely served as a catalyst for a lot of the laggards that had not previously prioritized digitizing payments, either making the payments or receiving the payments. They've had no choice. Just like your customers have not been able to go to the office, write a check, and put it in the mail. Suppliers have not been able to go to the office, pick up their mail,
Hard to go pick up that check when the office is closed.
it can't do it, right? So we've seen a tremendous amount of interest and actual execution of new accounts, new suppliers, new buyers over the last 14 months. In fact, our business development team has been more active with a bigger pipeline than I've ever seen since I started the company. A lot of it has been driven by the pandemic, I think. Do I think it sticks? Absolutely. Uh, People tend not to go back to checks and tend not to go
Right.
back to earlier, less efficient payment methods once they're hooked on all the benefits of digital payments, and specifically, card products, right? Where they are getting that working capital I mentioned earlier, where the suppliers, and by the way, in this during the pandemic, it hasn't just been about the when can I get paid. It's also been about the surety of payment. There have been a lot
Absolutely.
of companies.
Well, you talked
Uh,
about cash flow earlier, right? It's about, am I going to get paid or not? They're going to, so hey, okay, I
exactly.
have to pay a fee, but I'll get my money guaranteed tomorrow.
Well, I mean, here's the
Right.
beautiful thing about B2B. Every buyer is a supplier and every supplier is a buyer, right? So from our perspective, we can look at it and just kind of spider up and down, right? The web, and continue to get more and more traction and transactional activity. But the reality of that also is that, buyers during this pandemic have in many cases have had real cash flow working capital crunches of their own, where their customers have been delayed in being able to pay them. Perhaps some have, gone out of business. So the whole notion of cash flow, of working capital, has really just massive light has been shown on it over the last 14 months. And one of the ways that these companies can combat that is by using credit products like a commercial credit card to kind of fill in the gaps of that working capital and make payments, more of a sure thing. And that's have had dramatic impact on the way um, buyers and suppliers look at commercial credit cards over the last year or so.
Absolutely. Absolutely. I wanted to ask you two things on some of these, on some of this trend here is more like just barriers to entry here and just competition. It seems like you're almost in a market of one. I'm sure you have a few competitors out there. Certainly, there's the bigs, the biggest processors out there, the acquirers. It's you touched on this earlier, right? Where it's like, can anybody do this? Why, So it seems like though there's real barriers to entry around this. When I was starting out, everyone was saying to me, "Oh, PayPal could do what you're going to do tomorrow. Isn't PayPal just going to crush you?" And I was like, PayPal doesn't know where A and P are in the alphabet, and they're not going to. I don't have to worry about PayPal. But it seems like what you're doing is on one hand esoteric, on the other hand it's actually not at all, and everybody has to pay bills, and they're paying bills with credit cards. It's growing so quickly. Why haven't we seen more in this area? You mentioned you've been around for 12 years. Now you're really hitting your stride and in a global expansion. I mean, what's so really hard about this, and why some of these big FIs are turning to you to partner and some of the card networks and others? I mean, that would be interesting. And just your view on the competitive market. And I'm
Sure.
sure everyone else that's out there is not as good as you, is from what we'd expect to hear. But
Well, thank you. I mean, it's you know, in many respects, B2B is hard. It's just hard. It's hard because of the things we talked about earlier. It's hard because the relationships between buyers and suppliers are often very unique and need to be dealt with on kind of
it's kind of a scaling barrier to a degree, right?
it does. So even though the spend among trading partners is significant, and it really dwarfs what would be a consumer spend typically in any given transaction,
Oh, yeah,
it's
by
still
many
complex.
factors.
It's hard. And when I started the company, when I started Boost, I was actually on the board at that time of the ETA, the Electronic Transaction Association, which is really made up of most of the presidents and CEOs and COOs of the largest acquirers and processors. And I went around the room and asked, I'm looking to start a B2B company, and I need a processor. And what's interesting, with the exception of one company, the response I got back was very similar, and it kind of, to a large extent, remains the case today. The responses were that our DNA is really based on a consumer transaction, and it's a lot easier for us to replicate and airlift our current technology into places like China and Vietnam and Brazil and other places than it
Emerging
is
markets. Yeah.
emerging markets. In other, instead of kind of tweaking our technology and our processes and procedures all the way down the line to accommodate this thing called B2B that we don't really understand. So while it's probably unfair to say that all processors and acquirers don't understand B2B, that wouldn't be the case. But it's still not the focus of them. It's just not their focus. It's not their core competency. They have systemic limitations in terms of how they can tweak and really, in many cases, change platforms to accommodate these types of transactions. So it's hard, and that's obviously been beneficial to Boost to kind of start from scratch to build a technology platform that is built specifically for these types of transactions. As far as the competitive landscape beyond that is, there are certainly other players in the arena. One differentiator, I would say, that's consistently plays to our advantage is that historically the credit card processing arena has been kind of bifurcated into two worlds: those that live on the AP side and those that live on the AR side. So on the AP side, you obviously have issuers and program managers and AP optimization companies, et cetera. On the AR side, you have acquirers, processors, ISOs, PayFacs, billing companies, etc. Boost has always been a bridge between the two. So our technology, our go-to-market strategy, our all of our processes and procedures are designed to serve as a bridge between AP and AR. And there are really no other players that do that currently. There are those that are very good at what they do on the AR side, and those that are obviously very good at what they do on the AP side. But really, nobody else serves as that bridge joining those two worlds together as well as Boost does. And we're very proud of that.
Nice, nice. Um, Driving, before we talk about just maybe the future, um, are there some keys to driving more card adoption? Period. Is the answer just lowering prices? That was always a fear when I was at MasterCard around interchange rates in level 3 and others. Was it's like, oh well, you don't want to give too much because folks are going to start complaining. The issuers are going to complain. And I know you've done some special things in the past on your website and around, there's always talk of custom interchange rates and other things. Now we've got same day ACH coming out. The ACH for a fee product has been big promotion by players like FleetCor, Avid Exchange certainly has pushed that. I'm very skeptical on that personally. It's kind of hard to charge a lot of money for an ACH that costs pennies from my experience, but want to hear what you're seeing around alternatives or just the general barriers of driving card adoption, which I think today is probably the most important thing for Boost and Boost customers.
Yeah, I
I'd
mean,
love to hear your thoughts on that.
sure. So first of all, you're getting back to something I mentioned earlier in the conversation. You're often looking to get rid of preconceived notions of misperceptions. So that's a common ongoing theme for those that are not familiar with card acceptance. You want to get them to a point, these suppliers, that if they make a decision not to accept cards as a form of payment, at least they've done it with accurate information that they use for their calculus for that decision, right? So it's an ongoing educational process.
Yep.
As far as competing products like ACH with a fee that many players are coming out with, I mean, it certainly has a place. It obviously doesn't accommodate those buyers that need some type of credit extension. Once they hit that ACH button, that cash
The
is
money's
gone
up.
from the coffers of the company,
Yeah.
right? So certainly it doesn't. It really doesn't compete, with credit-oriented products like a credit card. But I do think that as data becomes more and more important, as more and more entities utilize this data, now you don't have to be a large multinational company to have an ERP platform. Everybody
Right.
has some form of an
Everyone
ERP
has. Yeah.
platform now, right?
Yes.
So data is becoming increasingly important. So I think products like ACH with a fee are definitely going to have a very important place in the marketplace. And what they're also doing, frankly, for those of us in the card industry or those that are kind of more card centric, is it has actually brought up the price of ACH transactions. And like I said earlier, I think there is kind of this equilibrium
Mhm.
of pricing coming.
And what do you mean by that exactly? Brought up the price of ACH transactions?
Well, I mean, to your point, people are now charging a significant amount, upwards of 1%,
Right.
for an ACH transaction that is delivered with all of the enhanced remittance detail.
Right.
So
Okay.
to suppliers, it's obviously what the market is saying. It is worth something for
It is
me
worth
as a
some.
supplier to receive this data in a format that I can ingest, right? So at the same time as you have ACH transactions, enhanced ACH transactions, the price of those rising, you also, to your point earlier, have both publish rates that are being published by the networks coming down to accommodate B2B transactions. You have companies like Boost that are also getting very active with proprietary interchange rates. And what you're seeing is this kind of natural equilibrium of, you know, coming into this kind of price point of what a meaningful size B2B transaction should cost, right?
Yeah.
It's not quite there, it's still evolving, but it's kind of a combination of all these competing products coming in together and forming a kind of this equilibrium price. That's my view anyway.
Yeah, that makes sense. Well, that's how markets should work over time, right? So there is some
The market is speaking, the market is screaming.
yeah, yes. That was so much of mine. I wish I bought some back then when Bitcoin first came out. All the crypto and Bitcoin people were saying, "Oh, payments is should be free, right? It should be the proletariat is spoken and everything's moving
Right.
crypto." And actually, it turns out people are willing to pay if there's something of value, right? And folks are
Exactly.
willing to pay over 3% for the card because of the security and the guarantee of the funds. And you've spoken at length about the data and, turns out someone is willing to pay that instead of just getting a piece of paper sent to them. So,
In some cases, they are, but
th-
I do see that price coming down significantly. I really do. I
yeah,
see that evolving as that equilibrium price across different payment modalities.
for sure. For sure. So, on that note, uh, and I don't know on what time frame that's going to be, but I'm sure you're going to agree that there's more advancements happening around commercial payments. And I think one of the biggest trends here has been this explosion in fintech and more of which you are one. But I think there's also this concept of this embedded finance or more about having software type platforms lead distribution for payments products and services and cash flow management tools versus just the financial institutions, which has been the vestige of the past. I think very much you're a beneficiary of banks just being banks and doing what they're doing, and corporates is doing what they're doing. But do you see that the software distribution is possibly any sort of path for you, or do you see software as being a way around margin expansion or preservation in the life of future payment cost reducing over time? I mean, maybe that's the wrong thread to pull, but I'm curious to hear your thoughts on just where the future of all of this is going, especially as the software investment around payments is going like crazy, and you can see the obvious connection point here.
Yeah, I mean, we as a fintech software company, essentially, uh, yeah, we absolutely think that you know it's going in that direction. And while financial institutions obviously play a mission critical role,
Sure.
they often have the customer, right, the buyer or the supplier, with some form of relationship, be it treasury related or whatever the case may be. They're always going to be in the game, but in terms of solving uh, the needs of the marketplace, in terms of the things like we're talking about, efficiencies, the kind of the ergonomics of these transactions, be it the automation, the reporting, just generally the data exchange and the transaction itself, the movement of money. You're seeing more and more fintechs come into that marketplace to create these efficiencies. And whereas the financial institutions used to kind of build it from within, you're now seeing a lot more of the kind of buy, rent, lease partner relationships
Yes.
across financial institutions and the fintech community. They're just, I mean, fintechs are just much more nimble. They can move much quicker in terms of accommodating the needs of the marketplace. The large financial institutions, even the very best of them, the smartest of them, they just can't move as quickly as a fintech
Yeah.
can. And that's just a huge advantage in the marketplace. And the market, if there's one thing that we're learning as time marches on, is the market's not patient at all. And especially in the land of fintechs, right, where things can happen very quickly, and requests from the marketplace can be accommodated very quickly.
Right.
They're just not going to be patient to let large behemoths get around to it when they can.
No, no. People get very agitated around money movement needs. We've found so.
Yeah. It's, you talked about earlier about, real time or same day
Yeah.
ACH, or, um, we haven't, frankly, found that to be of real critical importance in our business.
Yeah.
Our business tends to be made up, our customer base tends to be made up of large enterprises that have contractual terms, payment
Hmm.
terms
Hmm.
with their supplier base. So if they have, 30-day payment terms, whether they initiate that transaction on day 29 via card or day 30 for real-time payment, it's really just not proven to be that relevant in our world. But
Yeah.
it's going to be very relevant in the small business arena, in the gig economy. Um, uh, there's a host of different uh,
Absolutely.
avenues where that's going to be so incredibly important.
We don't see RTP replacing commercial card spend anytime soon. Is the
Different
answer?
animal,
Yeah.
completely different animal. We could, we see areas where we may be able to utilize the RTP rails, for those that are listening, real time payment rails, for distribution of cash associated with a card based transaction. But we don't, we see it as we don't see it as a competitive product to card transactions at all.
Yep. Yep. Well, before we go, any other thoughts, final closing thoughts, or anything you'd like to add as a next step for you personally and/or Boost that wasn't already touched on?
Well, like I said earlier, I feel we're at the 20-yard line going a long way. So we've come a very long way, but we have a long way to go as a company, as an industry. The opportunity is just absolutely massive. If you talk about that $121 trillion of spend out there that has yet to be digitized, I mean
Yeah,
that's our TAM, that's our target.
it's silly.
So it's early days, it's exciting days. As for Boost, I've never been more excited about our company. I have a team that is just absolutely the A team, the best team, that I've ever worked with by far, and continues to grow, continues to expand in terms of different capabilities, different directions, different verticals. So it's a very exciting time for us, and with this new investment, it's going to provide us with even that much more fuel to do what we're looking to do in terms of tackling more and more types of transactions, and just the amount
Lo-
of transaction flow on our platform.
and the proverbial loading up of the lanes, if you will.
Load up the lanes. Exactly.
Well,
Back to the days of
hopefully.
supermarkets.
Yeah, absolutely. Well, I hope that we can see each other. I know we've got to run, but hopefully we'll see each other before the end of the year here as this thing clears up. Maybe at a conference if you're up for it, or probably in the city before 2022. I'll look forward to that day for sure.
As do I. As do
Back
I.
to
I would love that.
normalcy. But look, we'll hang on here for a sec. But great to have you. Really insightful conversation, fun. I definitely learned something, and hopefully the
Thanks,
listeners
Ernest.
did too. So, look,
You got
we'll talk again soon. Thanks for the
You got
opportunity,
it.
and
Always good
best
to
of luck
see
to
you.
you.
Thank you.
Thank,
You too.
thank you. Thanks for listening to B2B Cashflow Conversations. This is Ernest Rolfson, the CEO and founder of Finexio. I welcome your questions and comments. You can reach me at podcast@finexio.com. You can also find us on Twitter at Finexio Payments. To subscribe, you can go to finexio.com/podcast. Be sure to check out my new episodes on Apple Podcasts, Spotify, or wherever else you listen to podcasts. Thanks, and talk with you again soon.